Most investors stick to what they know, and that means investing in domestic stocks, ones from their home market. But there's a whole world out there of international stocks, ones from other countries. Question is, should you invest in them? Well, by the end of this video, you'll find out just that. And if you watch to the very end, I'll let you in on a little known but real important fact about domestic stocks. Good day to you folks. Money Jim here, your money pal. Now when it comes to international stocks, most people don't invest much in them, or at least not as much as they make up of all the world's stocks. Most times, that's because of a thing called home bias. See, home bias means you invest more in your country's stocks than in others, and in extreme cases, home bias means you don't invest anywhere else but domestic stocks. Now there's plenty of reasons for home bias. First off, it's natural to stick to what's familiar. Stocks from your country in general are probably more familiar to you than foreign ones. You also probably got more information on domestic stocks, and there ain't no language barriers. Might be high costs for investing in international stocks, and there's foreign currency ups and downs as well. And that's why it ain't just everyday investors with a home country bias, but investment professionals all over the world too. Now that ain't necessarily a bad thing. If your home market does good, home bias can become a problem if the rest of the world does better, because in that case, it'll hold back your gains. Now for those folks watching from the US, you might be saying, but Jim, why would I invest anywhere else? The US is the biggest and best market there is, and you'd be partially right. See, the US makes up over 60% of the global market, so it sure is the biggest out there by a country mile. But even though it's done pretty good in recent years, it ain't been the best, not by a long shot. See, the best performing stock markets came from elsewhere. Over the past 12 months, it was Slovenia. Over 3 and 5 years, it was Argentina. US weren't even in top 20. And over 10 years, it was Romania. US didn't even make top 5. Now, even though they ain't been close to number 1, US stocks sure have done better than all the rest put together in recent years. Look here at the MSCI USA Index versus the MSCI All Country World Index, excluding US stocks over 3 years, 5 years, and 10 years. So if you're a US investor, you might be thinking, well, that solves it then. There ain't no point in investing anywhere else but the US. But hold your horses, because going back 10 years and investing ain't going back very far at all. Not when you consider most folks end up investing for over 50 years. Take a look at this. Over complete decades, that's the 70s, 80s, 90s, noughties, and the 20 teens, US stocks have done better than international ones just twice. That's right, the US only did better than everything else combined in 2 out of the last 5 decades. Still think international stocks ain't worth investing in? If you learned something new in this here video, I got plenty more where that came from, sunshine. So go hit that subscribe button down there so you don't miss a thing. Now, I ain't saying international stocks are gonna do better than US stocks over the next 10, 20, or 50 years, but I am saying that no one knows for sure which stocks in which part of the world are gonna do best at any given time. So you don't miss out on whichever ones ended up with the biggest gains. You gotta be invested in all parts of the world. US, Europe, Asia, emerging markets, the lot. And the same goes for investors in other countries too. Now, whereas it's common for US investors to only go for US stocks, if you're from the UK, Canada, Germany, India, wherever, you're probably already investing in stocks from other countries. You probably also invested more in your country than its share of the global market. That's called being overweight. Nothing to do with packing on too many pounds and investing. Being overweight is putting more of your money on average in an area, whether that's a country, industry, or a company. Here's how much the biggest stock markets make up of the global total. So if you invest more than 4% of your portfolio in UK stocks, then you overweight the UK. If you invest more than 2.5% in Indian stocks, then you overweight as well. And by the way, if your country weren't on the list, it's because its stock market don't even make up 1% of the world's total. As said before, it's all well and good investing more in domestic stocks as long as they do better than everything else. Truth is though, just like for US stocks, there'll be times when they do better, but also times when they do worse. Let me ask you this, can you say hand on heart, you know for sure whether your country's stocks are gonna do better than everything else in the future? I think we both know the answer is nope. And the truth is, no one does neither. So whether you're an investor from North America, Asia, Europe, or anywhere else in the world, if you want to make sure you always got at least some of your investments in the best performing regions, your portfolio's gotta go global. That means investing in international stocks. Sure, there'll be times when those international stocks don't do as well as homegrown ones, but when they do better, you'll be glad to have them. And that's diversification in action, spreading your investments around so you ain't got them all in one basket. And in this case, we talking about country-shaped baskets. See, there's thousands of stocks out there in the world. It don't matter if you in the US or anywhere else. If you just stick to those at home, you'll be missing out on thousands of opportunities for growth. If you want to broadly follow the global stock market, and remember this can change over time, you'll want about 2/3 in North American stocks, then about 15% in Europe, 10% in developed Asia Pacific stocks, and another 10% in emerging market stocks. But actually investing in international stocks is easy. The simplest way is with a super low cost international stocks index tracker, or ETF. They invest in nearly all the world's stocks outside of your home country. You could even invest in a global one. It invests in everything. US stocks, emerging market ones, Asian stocks, European, the works. And by the way, in case you were wondering, the difference between the MSCI World and the MSCI All Country World indexes, the former only covers developed country markets, whereas the latter includes emerging markets too. Now, a word on currency. See, if you invest abroad, don't that mean there's currency risk? Well, in a word, yep, don't forget, if you invest globally, you'll be invested in dozens of different currencies, some of which will go up against your domestic currency, and some of which will go down. There's a bit of balancing themselves out, and in the long run, your investment returns should far outweigh the impact of foreign currency ups and downs. But don't forget, it can sometimes work in your favor as well as against you. Let's finish off with that little known, real important fact about stocks in your home country. Well, they ain't as domestic as you think, and that's on 2 counts. First, on most major markets, there's companies from other countries in them. Don't have to be a US company to be listed on a US stock market, or a UK company to be listed on the UK stock market, and so on. In fact, the New York Stock Exchange got companies from nearly 50 different countries on it. And second, because the companies that dominate stock markets tend to be multinationals, they make just as much, if not more, of their money outside of their country than in it. Looking at the 3 biggest stock market companies in the world, Apple, Nvidia, and Microsoft, they all make about half, if not more than half of their revenue outside of the US. And this don't just apply to US companies neither. In total, companies in most major markets make over half of their money abroad too. So in a way, you kind of already are investing in international stocks, even if you didn't realize it. So there you have it. What do you think about investing in international stocks now? Worth it or not? Let me know. See you next time, sunshine.